having seen the financial crisis, it really gives you an appreciation for good financial regulation versus bad financial regulation. And this issue is much bigger than just crypto. It's a question of, do we tell people how they have to route their orders? If you are going to tokenize something, you need to figure out which bucket it fits in. We're looking at ways to enable people to experiment with trading tokenized securities, and that is going to require some experimentation. I think we really need to be careful not to say that pieces of software have to register as things. One of the other rules that I've talked about needing to update for a long time are the transfer agent rules. I think it's a really exciting moment to rethink how some of this infrastructure works, where the regulation obligations and registration obligations should be, that would make the system better for everyone.
Nothing said on inflection point is a recommendation to buy or sell securities, tokens, or any other assets, nor does it constitute a solicitation or offer to invest in any fund, product, or financial instrument. This podcast is for informational purposes only. The views and opinions expressed by hosts and guests are their own and do not necessarily reflect the official positions or views of their respective employers or affiliates. Hosts and guests may hold positions in companies, funds, tokens, or projects discussed. Hey everyone, welcome back to Inflection Point. I'm joined as always by David Lawant and Michael Marcantonio. And today we have a very special guest, Commissioner Hester Peirce. Commissioner, thank you for being here. Thanks for joining us.
Thanks for having me. I'm excited to be here. I do have to give you my disclaimer, of course, which is that my views are my own views as a commissioner and not necessarily those of the SEC or my fellow commissioners.
Yeah, thank you. I've been listening to you long enough to know that that's the standard disclaimer. So I mean, this episode, we're going to kick it off very high level. I mean, there's a lot going on in crypto markets right now with strategy and Bitcoin, but we're going to keep it very SEC focused. And the first question I kind of just wanted to get into is, sometimes we do Fed watching, sometimes we do SEC watching, and I wanted to ask, what do you think the coverage gets wrong about the SEC? Where are people misreading the commission's intent, you think, most of the time? And I'm very happy you gave the disclaimer for this one before.
I mean, I think when it comes to crypto, people assume that all we work on at the SEC is crypto, which is definitely not true.
Okay, yeah, love it. I think that's definitely a bias in my world, at least. Every new rule that passes, everybody assumes it's crypto adjacent. And so, I mean, you've been at the commission since 2018, and 3 different chairs, and we've had 2, I'll call it like eras of crypto within the administration. And for a long stretch in prior to this administration, maybe even now, you were writing dissents, and back then was explicitly as the minority voice. And now 2026, a lot of what you've argued for has essentially become the House position. And so I wanted to ask, what's that shift actually been like to live through? Is there, how does it feel from 2018 to how it feels now? Did you think you were going to get here? Is there any decisions that you're very proud of, or anything that you think you've gotten wrong in this transition? Yeah, tell me about it.
Well, definitely, I hoped that we would get to a better place, which we're in now, and so it is a relief to be here. I would not have imagined that it would have taken as many years as it did. It was pretty remarkable to me that it just took as long and as many twists and turns as it did to get here. But I think working now in an environment where the chairman is extremely supportive of making positive progress forward has been just a really wonderful change. In terms of what I regret having, not having done maybe, is that I think had I realized what a bad road we were going down earlier, I think I could have tried to pull us back onto the right road by doing a better, more thorough legal analysis myself very early in my tenure here. I did not think that would be necessary, but I think if I had done that, it could have helped the conversation. I don't think it would have changed necessarily a lot of what happened, but it could have maybe set us up better for when we came into a period where there was a more favorable administration.
That's excellent, Commissioner. If I can ask a question, and I want to get into tokenization and like all these cutting edge things that are being discussed at the commission, but if we could just before that, can you talk us perhaps very briefly about your career? Because I think a lot of people know, a lot of the crypto people know a lot about you over the past maybe 5 years or so, but you obviously have a very long career that spans both public and private service. So can you talk us a little bit about that? How you got to the SEC, how you got interested in doing what you're doing, and get to the spot that you're at now.
Yeah, sure. I came to securities law because I had a deep interest in economics and in law, and so it was a nice marriage of the two. And ended up at a law firm doing securities law right out of. I did a clerkship after law school, and then I went and was working at a firm that was very heavily engaged in securities law of all types. That led me to go to the SEC because a lot of my colleagues had worked at the SEC, and it became clear to me that it was a good place to work, but also really helpful to understand securities law if you've worked at the regulator. So I did that. I ended up well, I was writing rules for mutual funds for the first part of my time as a staffer, and then I worked for now Chairman Atkins as when he was a commissioner. Then after that, went off to work on the Hill and was there during the financial crisis, working at the Senate Banking Committee, and then went into a research center where I was working on thinking about how regulation could be done better. Having seen the financial crisis, it really gives you an appreciation for good financial regulation versus bad financial regulation. And so I wanted to think about how we could do it better. I don't think that the lessons that a lot of people took from the financial crisis were the right ones. So there I was able to work with economists and others to think about good regulation. And then had a chance to come back to the SEC as a commissioner. That was something that I had not wanted to do. In fact, having worked for a commissioner, I knew I didn't want to be a commissioner. Um, but then when I had the opportunity, I thought it might be fun to actually have a role in shaping policy. And so I was happy to and honored to be able to have that chance.
That's fascinating. Can I just ask a follow up? How did you get interested in crypto? When did that start to come in your radar?
Well, I mean, I heard about crypt. I heard about Bitcoin pretty early on because I was working with Jerry Brito at Mercatus, and he was very early on involved in, interested in Bitcoin and other crypto assets. So that was my first exposure to it. But um, when I got to the SEC, I had seen from outside that the SEC was struggling with, I would describe it as struggling with how to approach Bitcoin exchange traded products. And so one of the first things that we had to look at when I after I became commissioner was this the one of the exchange traded products. And it just was really my first digging down into that was really my first realization that we were applying a different approach here than we did to other things. And that's not what a regulator should do. And ultimately, a court agreed that that was not what we should be doing, but that took years. So that really was my introduction to crypto.
That's fascinating. I'll ask just one more question, if I can, Michael and Mark. I guess wanted to touch a little bit on the tokenization side of things, which is obviously a massive trend in the market. I'm sure it's something that the SEC, the staff, has been spending a lot of time on. We obviously saw episodes like Token AI, OpenAI disavowing the tokenized equity that are linked to its shares. I think at the time trading on a US platform. I think the SEC issued a statement kind of classifying tokenized assets in three categories and kind of maybe delaying a little bit, or at least shunning a little bit the idea of the synthetic category here. Can you talk a little bit about that? Like, what is your view here? What do you think are the next steps, and what is your understanding on this whole area of the market that is so important and it could impact so much of the market structure?
You're right to point to that statement. I think if people are interested, they should look at that statement on the different models. And I'm not going to talk about any particular issuer and its stock that is its stock being tokenized, but I think more relevant is the idea that if you are going to tokenize something, you need to figure out which bucket it fits in. You can have natively, the issuer itself can tokenize, or it can be tokenized in sort of an entitlement form, which is very standard. It's done now, right? Entitlements are not new; they're done with now. So that's sort of standard. And then there is a synthetic version that's out there, and what we want to emphasize is that you can have a synthetic, but it's not the same security. And so that means that, as with anything else, it has to be registered or exempt from registration under one of the exemptions if you're going to offer it in the US. And so you really have to think about what that is and how it needs to be registered. And if that's something you're interested in, you should come talk to us. Issuers, when a stock is out there, issuers don't govern secondary trading of it, right? That's not when a company goes public, its stock is out there. But this issue has really come up in connection with the innovation exemption, which is not out there yet, but people seem to think they already know what it is and what it isn't. But as I have emphasized, we're really not looking at setting up the innovation exemption is about trading of tokenized securities. It's not about how you tokenize securities. But what I have said is that I've never envisioned it as being about trading of synthetic synthetics. It's about trading of the one of the first two categories in that statement.
I mean, there's other rules that are being proposed. There's the rescinding of the 611, 610E. Are these just the parts that need to go into place in the background while the innovation exemption does the leg of the work, so to speak? Because if we ignore the innovation exemption, which isn't out yet, which has been delayed, yes, I know, but if we have the six, the proposal to rescind these couple of rules, but then that still leaves a lot of other questions. Is the idea that the innovation exemption is to hold us down until until all of the other rules are put in place, or what's the actual purpose here?
Well, first of all, I mean the notion that it's been delayed. I mean, we've been working on the innovation exemption for some time, but I don't know what in this context delay means. There's sometimes people, I think, have put undue weight on the innovation exemption. As I've said, and as the chairman has said, we're looking at ways to enable people to experiment with trading tokenized securities, and that is going to require some experimentation. We have to understand how the stocks trading in tokenized format will interact with stocks that are not trading in tokenized format. And so there's some issues there that I think we all in the market need to work through. The innovation exemption is intended to be one piece of working through that. It is not a permanent thing. The goal is to get to a rule or a set of rules that govern this. And so we will get information from this, as will the marketplace, and I think it will help us as we develop a rule. But I think people really ought to keep their eye toward the longer term goal of that rule. What should that look like? We would love to get people's input, so people want to weigh in on that. With respect to 611, the trade through rule, also known as the order protection rule, that issue is a much bigger issue. It's not a crypto issue. I mean, it's relevant. So you're not wrong to bring it up in connection with trading of tokenized securities, because there are some questions about how it would apply in that context. But this is something that so I was working for the chairman at the time that Rule 611 was adopted, and he was he and Commissioner Glassman at the time were opposed to it and wrote a dissent on it. And we have subsequently, had 20 years, and we had a couple roundtables on the topic. And there's a lot of sentiment, and we'll see what the comment. We now have the proposal out to rescind it, but in those roundtables, there was a lot of sentiment that even if it served a purpose at one point, that purpose has sort of passed away, and so we can move into a post 611 world. Now, again, we'll see what the comments say, but I think this issue is much bigger than just crypto. It's a question of, do we tell people how they have to route their orders? That's in the stock market. That's a very, to me, central planning kind of thing to do. And so we ought to have a very good reason for doing it if we're going to. And so that's why I'm really curious to see what commenters will say and see if they agree, and see what, if we do take away that rule, what will need to change, to make sure that we're still achieving the investor protection and market integrity goals that we have.
Yeah, let's stick with 611 because it's interesting. Because I think a lot of people are, at least in crypto, are couching the potential rescission of 611 as a green light for tokenized equities on chain. The logic being that an AMM can't comply with 611 by construction. A bonding curve can't respect the national best bid and offer. So killing the trade through rule clears that path. Two-part question here, but first, do you agree with that analysis, or is that overstating it?
Well, I mean, I think that there are questions about how 611 would apply in an on-chain world with AMM. So I think that that's a fair point. But I think the overstatement comes in the fact that although the innovation exemption isn't out, if people want the innovation exemption and other trading of tokenized securities to wait until 611 is rescinded, they may have to wait a long time. One, we don't know what the comments will say, and the comments may say, we don't think it's a good idea to rescind it, so then it wouldn't move forward. Or even if the comments, as I anticipate, and as we heard a lot during the roundtable, that there will be commenters who say, no, we agree with you, let's rescind it. That process takes some time. And so the exploration of trading tokenized securities will move in parallel, not sequentially. So I don't think those two are inextricably linked. And again, I really do emphasize that 611 debate is a much broader debate. Now, I think the point that I have always had, the reason I've always had trouble with 611 is that the goal is that it was adopted under this part of the law where Congress said to the SEC, you need to facilitate a national market system. You don't want to have a bunch of different exchanges all doing different things, and you don't want those markets not to be interlinked. But my view is that, and Congress is Congress, so they tell us what to do. But I also think the realities of the market are that people are really good at arbitraging. And as long as you have information out there so people can see what the prices are in different marketplaces, market participants are very good at arbitraging. If there's money to be made, if there are differences in the prices, they will work it so that those prices even out across the different markets. And we don't need to have a regulatory system that mandates that. It will happen organically. So I think one of the things that we are looking at in connection with tokenized securities and the trading of them and AMMs and things like that, we need to make sure that there's information available so that people who want to engage in that arbitrage are able to do that and able to see how things are trading and what the prices are and so forth. So that will be a process, and that I think we would love to get feedback on how we can best facilitate people's experimentation and make sure that the markets really are integrated, because it will be good for everyone if those markets are integrated so you don't have fragmented liquidity.
Right. Yeah, I mean, my position on 611 is that even if it were rescinded, that's not really a green light for trading tokenized equities. I mean, it might be one barrier that may or may not be, reduced, but you still have a host of other rules that a AMM or smart contract can't yet comply with, like 3B16. These AMMs would still arguably be defined as an exchange, and therefore it'd have to register under Section 6 or run as an ATS. And be registered as a broker dealer, and obviously, like a smart contract, probably cannot do that.
So
And
right, and I just want to, I just want to weigh in here because
yeah,
I think this is one of the debates that we were having under the prior SEC, where we had a proposal out on 3B16, and we, I think we really need to be careful not to say that pieces of software have to register as things.
right,
And I think we need to be really careful not to say that decentralized things need to register as if they were one united entity. That
right,
said, I think you're right that we're probably going to end up in a world where people are using on-chain mechanisms to trade, and someone in that system will be registered as an exchange or an ATS or something similar. But I think that's part of what we have to figure out. Where does the registration obligation properly attach? And we can't be in a world where you require registration of a software code, or you require a developer who just puts code out there to register simply because she's published code. That I don't think would be a good place to be.
right. So that's one rule for sure that is a little has some tension with the existing law. I mean, also settlement has to clear through a registered clearing agency under 17A. Like that doesn't make a lot of sense. If the underlying share has to sit with a qualified custodian, and then a transfer agent, it seems to obviate the benefits of a blockchain. Right. So there's a bunch of different rules, which is why I think most people are excited about the innovation exemption, just to be able to not have to comply potentially with a host of different rules that the technology is fundamentally incompatible with. Um, but I guess that's at least how the industry is seeing it. Do you see it that way? That is the use of the innovation exemption, is to sort of cut through a host of different rules, instead of having to modify each and every one of them to create space for blockchains to be able to trade tokenized securities?
Well, I think that it what rules are applicable to different people taking advantage of the exemption are going to depend on, you could have someone who's a regulated entity decide to take advantage of the innovation
Right.
exemption. And so I think we're trying to make it possible for people to explore doing trading on chain and providing relief where it's necessary to do that. But I think you're raising the right questions and the right considerations. Will some of these regulated entities be replaced by the technology? Will they be supplemented by the technology? Could you have a world in which transfer agents are actually doing more than they're doing now, but they're doing part of it using the blockchain? One of the other rules that I've talked about needing to update for a long time are the transfer agent rules. And I'm sad that we've waited so long to update them because they're really out of date. But on the other hand, I'm actually happy that we've waited because it really now is actually a better time for us to rethink what those rules should look like in light of what we're seeing with um, with tokenized securities and what role transfer agents are playing. So if we do get those proposals out the door, I hope that people in this space will pay close attention and will be thinking creatively about what role the blockchain can play in serving the functions that transfer agents play. And then you mentioned clearing agencies as well. I mean, that's another area where we're seeing more interest in being a clearing agency than we've seen in a long time. And that comes not only from the crypto world, but also from the treasury world, where we have a new mandate to clear treasuries, and so we've got some new clearing agencies there. So I think it's a really exciting moment to rethink how some of this infrastructure works, where the regulation obligations and registration obligations should be, and what we can offload to technology that would make the system better for everyone.
That is all fascinating. And Commissioner, I think I heard you making the distinction between on chain finance and decentralized finance, kind of in another setting. I wonder how it relates to this. Would it make sense to see, maybe at least in the short term, for us to see blockchain finance or on chain finance being perhaps mostly or at least partially conducted by these registered players? Maybe in the future, we're going to get to a world in which everything is decentralized and DOG, more like akin to DOG crypto people. But in the short term, would it make sense to have this on chain finance that is more, let's say, a little bit more like the walled DeFi or gated DeFi kind of construct that people have been referring for a while?
Yeah, I mean, I think it's important to make the distinction because it really is it is different when you're involving intermediaries. Then you probably want some regulatory structure around them. But that's not to say that I don't think that the OG folks have a good point about there being value in having the opportunity to engage peer to peer, or more I think directly it's peer to protocol, right, where you're deciding, you're opting out of an intermediary structure and into this other structure. I think that should be an option. I think it's something this technology enables in the securities world in a way that it hasn't been possible really, at least in recent years, just because of the way that the markets operate. But I don't want to overpromise either, because we live in such a regulated world. The securities world is so heavily regulated, and um, one thing that I've noticed in my time in DC is that there are a lot of things that drive regulatory policy that are not like what's going to work best for people, but it's like, well, what can we have that will plug into our AML KYC regime or into our
Hmm.
tax regime? And there are good reasons for both of those systems to exist and to make sure that they're comprehensive. But at the same time, I think we also, as a free people, need to be thinking about um, how can we guard people's ability to engage in peer-to-peer activity, and so those are debates that we have to have, and there's some complications there, and we want to make sure that people are complying with the tax law. We want to make sure that our financial system isn't being used in ways that are harmful to the nation or its people. But we also have to, I keep coming back to the importance of giving people sovereignty over their own assets, being able to hold those assets in a wallet themselves, instead of having to hold them through intermediaries, and being able to interact with peers.
Yeah. One follow up on 611 that I have. It's actually broader than 611. It's related to market makers and the regulation of market makers for securities today. Today in crypto, you have market makers that I would argue is maybe the golden age of being a market maker in crypto, because anyone could be a market maker. Anyone could trade on centralized exchanges and make markets, or decentralized exchanges increasingly. Obviously, that's much more restricted when it comes to securities. When you start to look at securities trading on chain, what's your view on market makers either being AMMs, which you touched on before, but or non-AMMs, let's say prop AMMs or private market makers, having to register as dealers in order to trade securities? Do you think that is appropriate, or do you think that is somewhat of an article of the past, and that because crypto models seem to be doing it just fine, maybe it would also work for securities as well on chain.
Well, you're opening up quite a can of worms. The dealer definition has been something that's been quite a matter of debate and discussion at the commission. We had a rule that was pretty controversial and got struck down, and not in the crypto context. This is just more broadly. And so I think it's important for us to distinguish between someone who's actually a market maker with regulatory obligations and someone who's providing liquidity. I mean, I don't think that people should be punished for being liquidity providers by
Right.
saying, "Hey, welcome to this regulatory regime." But at the same time, we have a statute that tells us that dealers have to register. So figuring out where that line is difficult in the traditional world, and I'm sure it'll be difficult in this world as well. I do think it's important for people to understand how the markets that they're trading on operate and who the different players are and what those folks' incentives are, and are they getting compensated to play a role? I think that it's regardless of what the regulatory scheme ends up looking like. I think it's important for people in the industry to want these markets to work in a way that um, people get to see and understand how they operate so they can know what they're getting when they trade.
Yeah, I mean, just last point on this, and then Mark, I'll hand it off to you. Uh, the dealer registration guidelines and obligations, especially under FINRA, are so onerous or so expensive that I think it might crowd out a lot of the current crypto market makers from being able to actually comply with them. And so, just my 2 cents on this is that might be an interesting subject of the innovation exemption. Is that on the table to that the innovation exemption could cover the regulations, the registration requirements for dealers?
Well, I mean, the innovation exemption primarily is about thinking about how people can use AMMs to trade on chain, but you know, certainly the dealer issues are tangential to that question. And so, um, if the innovation exemption does come out and if people see it and they have questions on that front, they should definitely inquire with us.
So
Thank
I
you.
want to tie this into a little bow here. I mean, we've talked about quite a few different things. We've talked about the rescission of 611, 610E. We've talked about the definition, 13B. We've talked about the definitions of what it is to be a market maker or have these licenses. We're talking a lot about market structure here. What are we not talking about, Commissioner? Like, what are the other areas that are potentially gray right now that you're looking into, perhaps rescinding as well, or maybe adding on to? Yeah, what is the SEC or what are you looking at right now?
Well, we still have to do something with respect to people who are trying to raise funds in connection with issuing crypto, and so that's something that I've been thinking about for a long time. I had that years ago idea for a safe harbor, and I think there's still an appetite for something along those lines. So that's one piece of things. Clarity, of course, the Clarity Act is out there, and so that's also something that we hope will get across the line here in the next couple weeks. And then there are a lot of questions around custody for broker dealers, for investment advisors, and I think there are a lot of interesting questions around um, money market funds, which again, that's an area that we've been working on for a long time. But I think people are thinking about ways that they can expand upon what tokenized funds are doing and are used for. And so I'm hopeful that we'll be engaged in those questions as well. And I mean, I think there are just any number of areas in which this tokenization and blockchain and crypto asset questions and stablecoin questions, how do stablecoins get treated? All of these things are opening up a lot of different areas for us to look at.
Nice, David. I think you have a follow up, but I just wanted to ask that you said one of the first things you said, and it sounds like there's a lot on the plate left. But one of the first things you mentioned was about around the fundraising, and I know the Clarity Act also touches on that. Would the Clarity Act passing help that aspect of it, or they're still untouched areas?
Yeah, no, it would certainly that would be helpful. We will have some rulemaking obligations that flow from the Clarity Act, but I that's something that they've definitely been grappling with, and so that will be helpful. I guess one other area I should mention is that anything crypto related brings up questions around CFTC, SEC harmonization, and that's an area that we are also spending a lot of time on. The commission is spending a lot of time on, and it isn't limited to crypto related stuff, but I think the crypto questions have really helpfully opened a number of areas where we can work with the CFTC, and so that's also something for folks to watch.
Yeah, that is incredible, and we can talk about hours about all these open questions. But if I may, perhaps add two more here, or just general questions on those. The first one is that with regards to vaults, is that an area of interest or something that the commission would be looking into potentially in the future, or maybe that is already included in some of the categories that you already mentioned?
Well, you're right to bring that up, and I think that it's important for people to think about the securities laws and how they might apply to activities in which they're engaged. I think it's really important, especially in an environment where we have made it clear we want to work with people. We're trying to be have an open door for people to come in and wrestle with us through the issues about when and if so how the securities laws should apply to activity. But I think people need to not just make the assumption that the securities laws don't apply because this is a favorable environment. We have statutes that govern what we regulate, and if activity that people are engaged in touches upon those statutes, they really need to be thinking about what would a good regulatory framework look like here. And so I do urge people who are interested in using or advising creating vaults to be thinking about those questions, to be engaging with us on those questions, and to really wrestle with them now so that we can get to a good place.
That makes a ton of sense. And if I could ask another question along those lines of maybe a little bit questions that remain open. This one is on the crypto asset taxonomy statement that the SEC put out, what, maybe 3 or 4 months ago. And that was obviously a major milestone for the crypto industry. If I read it correctly, there are 5 categories there, very well defined: tokenized securities, stable coins, I think digital collectibles. There's another one called digital tools, which are the utility NFTs as they're known in the industry. And then there's the crypto commodities, right, which are these crypto tokens that achieved a certain level of decentralization, like Bitcoin and ETH and a lot of these other assets. The question I have on this is that there is one category of assets that part of the industry, and I would agree with that, was not, at least it's still a little bit hard to understand where they would fit, which is what we call in the industry the revenue generating crypto complex, right? So these are maybe the hyperliquids of the world or Aerodrome. These are token projects that are maybe not as decentralized as Bitcoin or ETH. They usually have some sort of revenue generation and token buyback component. So in a sense, they look a little bit more like equities. Is that also an area of exploration? What is the latest thinking around those assets?
One of the things that we did when we put out that statement is we said, we invited feedback and comments and questions, and I think some have come in with questions about those kinds of tokens, and so we're certainly open to engaging with people. I do think further guidance could be helpful. So if people have specific questions, they should let us know. I mean, I really hope that we can get to a point where if someone does want to create something that is a security, they feel comfortable doing that and that there'll be a way for them to register that and it won't be as much of an issue. In the past, people have had to do everything they can to run away from the security classification. So I'm hoping that we can make it a better environment for that. But again, people should feel free to come in and talk to us about if they have questions. Why wasn't this token included, or where does this fit within the framework? Reach out.
Got it. It makes a ton of sense.
Yeah, I mean, you just said you hope people feel comfortable to come out and register as securities, and I've heard you in the past talk about the drought in the IPO market, so to speak, and you've argued that there's a lot of regulatory oversight, and that's why the number of companies and the number of IPOs or number of listed companies have dropped like by over from 5,000 in 2024 in like 20 years to much less than that now. So what needs to change in the rulemaking for us to see more IPOs, more listed securities, to get that entrepreneurial spirit back into the regime?
It's one of the chairman's primary pillars of his mission is to try to make it more attractive for companies to go public and stay public. And so that requires a number of different angles. It requires thinking about the disclosure framework that we have, which has become just we've layered on disclosure requirement after disclosure requirement. And so, can we peel away the ones that are not material and focus on material items? That's one piece of it. Another piece of it is we just put out several rules that would change the make it easier for companies that are public, streamline some things for them. It would streamline the categories of public companies. We're also asking questions about whether people think we should move away from mandatory quarterly reporting. And we also have looked at the issue of arbitration versus shareholder litigation, since that's a reason that companies don't want to go public. So we have a limited role there, but we have told people that if you want to have an arbitration provision, we're not going to stand in the way of that. And then just other things like moving away the barriers to research analyst coverage, and giving, I think even 611, things like that, market structure issues, addressing those issues, I think can all help to make the public markets more attractive. So we're working on it.
The reduction from quarterly to semi-annually. When I first saw that proposal, I was thinking was the primary reason, as you said, to make it easier on the already listed companies? Because my first thought was, this is something that happens in Europe where they do it semi-annually, and the argument here, there's some like papers from the early 2000s discuss how it makes investors switch to more long-term thinking, and instead of quarterly, focusing on next quarter's profit, and you can actually see higher returns in the longer time period. Was it primarily just to make regulation easier, or was there any thought about this as well?
Well, I think the research is mixed on whether or not moving away from quarterly would change that dynamic. But I think the real question was, can we, for some companies, is the cost of producing quarterlies outweighed by the benefit to investors? And maybe it's not all companies. I mean, that's why we're sort of leaving it open in the proposal. We're leaving it open to folks, but we've gotten a lot of comments so far that's not very positive on this particular proposal. One thing that I have asked in connection with it is, could we pare back the quarterly so that it's just an easier lift for companies, and that you're really giving the financial information, but maybe making it an easier lift. So that's a possibility. It is an open comment period, and so I don't want to prejudge where we're going to come out. I think we're very much we're happy that we're hearing from people, and we're very much our ears are very much open to those comments.
Love to hear that. So we've really bogged down into the details here with all of these rules and market structure. So let's just zoom out again, and then I want to ask this question in two ways. in 5 years' time, what do you hope the markets will look like? And then also, if different, what do you think the markets will look like?
I hope that we'll have markets where people are actively engaged, including retail investors. I think one of the nice developments in recent years have been that there is more and more retail investor interest in the markets, and our markets work best when we have broad participation. So I think that's great. I don't know whether tokenization will be the format in which most securities are found, but I certainly hope that we get to a place where people can experiment with that. I think there's a lot of promise there for a number of reasons, and I think it could be quite beneficial. And so I would love to be in a place where in 5 years from now we had active, eager, enthusiastic participation by both incumbents and new entrants in tokenizing. So, what do I think it will actually end up looking like? I guess that remains to be seen. I mean, I'm optimistic. I think if clarity passes, that will be helpful too. We're it's really an era of quite a bit of innovation in financial products as well, and so I don't know how all of those will end up, which ones will end up catching hold and which ones not. So I'll be watching on the sidelines and eager to see.
Lovely.
Yeah, I'm. I think that question, Mark, it's a good one. I think it really highlights, I think, a confusion in the market about if you want to issue tokenized securities. There's three models right now, right? There's the issuer sponsored, there's the custodial, and then there's the synthetic. And like, which one should you pick if you are thinking about doing the very necessary work of getting securities on chain, right? We're not going to be able to have a blockchain marketplace of securities that is flourishing if there's a deficit of securities that are actually on there. I think the issuer sponsored ones are interesting, but relatively, I think, straightforward. I think between the custodial, which is to say the DTC model, and the synthetic, I think there are a lot of questions between the two, and I think many of our listeners get confused about what's the differences between the two. I don't know, Commissioner, if you have is there a clear way of distinguishing between the custodial framework versus the synthetic framework, or is it really just like DTC's tokenized entitlements? That is the custodial framework, and then anything that sits outside of that would be that is holding securities on your behalf. Those would be synthetic.
I mean, the custodial entitlement framework is really one where you get all the economic rights. You are the owner of it. You get the voting rights, you get the economic rights, you get the dividends, so
Right.
forth. So the synthetic version is where someone is holding securities, and you're sort of buying into whatever uh, vehicle they have in
Right.
which they're holding the securities, and so your claim to those securities depends somewhat on that entity that
Right.
is holding those. And so that's why that does become a separate security, whereas the entitlement is the actual underlying security. And so I think people just need to think about it that way, and they need to think about what it looks like to register that synthetic option. Um, a lot of that activity has happened outside the United States, but there's nothing stopping people from coming here and registering those synthetics.
Right.
But the
Could
key is just that they have got to be clear with people buying them about what it is they're getting and what additional risks come from that model and what limitations on benefits come from that model. And that may be, in the sense that you might not be getting the full rights, but that may be what people want, just economic exposure to
right.
the asset.
Could so Ondo, I believe, is the largest securities issuer right now on chain, if I'm not mistaken. And those I think most would consider synthetic. If Ondo granted all of the, and I'm not calling out Ondo. I'm actually not sure if this is the case, but let's just assume that not all the rights are extended. If they did extend all of the rights that the DTCs tokenized entitlement model gave, would that in effect transfer to custodial, or are there other things that you would need to do in order to make
Well,
that a
again, I don't want to
reality?
talk about any particular issuer or particular entity, but that custodial model does entail a registered entity.
Right.
So that's, I think, the piece that people need to think about.
Got it. Okay, no, that makes sense. That makes sense. Yeah, and then just final point for me. I think I'd love to know your opinion on what happened with respect to tokenizing OpenAI private shares, and if there's, I mean, for the viewers, just to give some background, like Robinhood was, OpenAI disavowed the tokenized equity linked to its shares that Robinhood was offering, and I guess the question is, should an unaffiliated party be able to tokenize a company's shares without the issuer's consent at all?
Well, I'm not going to talk about any particular company, so let me just take it out of that context.
Yeah.
But I think the point that people need to be aware of is that when a company decides to go public and its shares are public, it doesn't have control over whether people take those shares and do something with it. They don't get to have that limitation. But again, facts and circumstances matter, and so I am certainly not talking about any particular facts or circumstances. But companies, when there are entitlements of company shares, nobody has to go ask the company about that.
Got it. Yeah, no, that there's just so much room for the discussion here, and we could spend hours, but I think unfortunately we're getting to the end of our time. If I may ask one more question, Commissioner, just a couple of questions ago, you were answering Mark and saying that you would be on the sidelines. Tell us a little bit what the sidelines look like. It looks like I think your term officially ended last year, if I'm correct, and then you can stay until the end of the SEC fiscal year. You're going back to academia. Tell us a little bit more about what's next for Hester Peirce.
Yeah, my term did end last June, and I could theoretically stay till the end of this calendar year, but I'll be leaving before then to go teach, and I'll be teaching law school. So I'm excited about that, and I'm excited to be leaving all these difficult problems to someone else.
What do you have any classes picked out that you're going to be teaching in law school?
Well,
Securities regulation?
I'll teach securities regulation. Yeah.
Nice. Love it. Go ahead, David.
Yeah, no, there's gonna be a lot of crypto people who like to audit that class or squeeze in or maybe grab a little bit.
I don't know. I think the crypto people have heard enough from me, so it'll be good to for them to get to learn from the new commissioner.
But thank you for everything you've done for crypto and for the industry more broadly. You've done and you still do. Thank you. Very much appreciate it.
Yeah.
Well,
Thank
thanks,
you, Commissioner.
Thanks for the conversation, and I'm honored to be able to have the chance to talk with you all today.
Okay.
Thank
Love
you.
it. Thank you so much. Those students will be very lucky. Thanks for watching, everybody. This was a special episode and our first guest. So be sure to tune in next week where we're going to be back to market talks and what the World Cup predictions are. Cheers.